Hey, what's going on, guys? So I'm coming at you a little late tonight, but I wanted to make sure I got this in. I had a client call and ask me how much do I get per kid, and I tried to explain to him it was dependent upon his income, and this is literally what he said to me. Okay, this is why I'm doing this video today. I want you to understand kind of. All right, this is what he said. He says, I don't like when I'm not educated on something. I feel ignorant. That's what he said. And that's after I explained to him that. So I didn't realize it until after I had this conversation with him. But I get that question a lot. Every single year, somebody is asking me, how much do you get for a kid? I've heard people ask me, how much do you get for a little kid, right? What if it's a newborn baby? How much do you get for that? And I same thing every time. It doesn't work that way. There's no such thing as you get so much money per child. Doesn't work like that. It all depends on income. It's all math. All right. It's never as simple. And the first question I asked him is, how much did you make for the year? Well, I don't know. Well, I can't tell you what you're gonna get. So what I'm gonna do is do my very, very, very best to explain today exactly how earned income credit works, how the child tax credit works. At least that information will be out there, right? Okay, so I had to do this in front of my computer, which is why I didn't do a video earlier today, because I wanted to be sure I was in front of the computer, so you can see how this stuff works. First things first. This is 2015. That's not cool. Hold on. Wait a minute. I pulled up the wrong one. All right, let me turn this around so I can show you what I'm doing. All right, so what I'm doing is I'm just Googling the 2018 EIC table IRS, okay? And so we're gonna click on that one, back this thing up here. And what I'm looking for is the IRS website. So right there, 2018. Now, the reason why I'm looking specifically for 2018 is because these numbers change every single year, okay? And so what we're looking for is the Earned Income Credit table. And that's gonna be in publication 596. Okay, publication 596. Come on, where's my table at? How to get help? I swear, man, that's the problem with doing stuff live. I had this pulled up before I started, I promise you. Figuring. Let me see here. Figure. No, I don't want to figure. That's the schedule. We don't need the schedule. All right, so let's do this. 596. So it's publication 596 is what it is. And what we're gonna do is, there we go. EIC table. See that? Now, last year I put this up on my website, and I'll probably do the same thing this year because it is kind of hard to get to if you don't know what you're really doing. Anyway, so this is the table, okay? This is what it looks like. This simple. So it says right here, if you're single, head of household, if you have 0 children, and you earn between $1 and $50, your earned income credit is $2. Okay? If you're single, head of household, and you have 3 children, okay, and you earn, God damn it, let's get this out the way. All right, and you earn between $1 and $50, your earned income credit is $11. Okay, now what I want you to do is I want you to see what happens as you go up in income. Okay, so remember, this is the income over here. Okay, if you can see my mouse, that's the income over there. All right, this is 0 kids, 1 kid, 2 kids, 3 kids. All right, now this is married filing jointly. Same thing. 0 kids, 1 kid, 2 kids, 3 kids. Okay, so as we go up in income, okay, you'll see that the earned income credit gets larger and larger. Okay, same thing over here for the married filing jointly. So let's keep going. All right, so as the income gets higher and higher, okay, look at that. See, now we're at 5,000. See, now we're at income of 7,000. Okay, income of 8,000. All right, now what we're trying to do here is we're going to find out what the max amount of earned income credit is for one child. That's what we're going to do. And here we go. All right, let's back this up and make sure though. Yeah, so you got to look at the other side too. So there's two sides to this, okay? So you got 11,900 over there, you got 8,000 over there. So you're going to come over here. You see one child, 3461, that's the max, but we want to find out at what income level that is. All right, here we go. So see this? So at 10,150, if you're single or head of household and you have one child, the max earned income credit you can get is 3461. All right, now if you earn between 10,100 and 10,150, you see it drops down a little bit. Okay, it drops down to 3443. Okay. And this the way it goes. So any dollar that you make above this 10,150 to 10,200 or 10,200, any dollar you make above that is not going to change your earned income credit at all until, let's keep going here. See this, even at 15,000. See, it still doesn't change. Now, once you get down to, let's cross over here. All right, here we go. Once you get down, or get up rather, to 18,750 as a single person with one child, your earned income credit starts to drop off. Okay, there it is, 3451. Okay, now as your income increases past 18,750, your earned income credit gets smaller and smaller and smaller and smaller. Okay, all right. So let's look at the max earned income credit you can get for 3 children. We see it right here. 6431. Okay, 3 children at 18,550. Actually, let's cross over. Let's go up. Let's make sure. 6431, 6431. Looking for that number to change somewhere. 6431. There we go. All right. So right here, 3 children and 14,300. Okay. Any dollar below 14,250, and you see for 3 children, your earned income is actually less. See this? 14,100 is less. 14,000 is less. 13,950 is less. All right. Once you get to 14,250. That's when you get the most earned income credit you can possibly get for 3 children. It's impossible to get anything more. It just doesn't work. Okay? All right. Now, as you increase your income, you see it stays the same. Okay? It doesn't change, right? 14,800, 14,900. It stays the same. Even when you come over here, 3 children, 16,000 stays the same. We can go all the way down this list and let's see where it changes. All right, now let's come across. All right, right there. It changes at 18,750. Once you get to 18,750, if you have 3 children, your earned income credit starts to drop off. As your income increases, it drops off. Your earned income credit gets smaller and smaller. Okay? Now, if you're married filing jointly, I'll see they give you a little bit more. So if you come over here to married filing jointly, see, 6431, even if you're making 20,000. Okay, so if you're married, you're making 20,000, you still get the max earned income credit. Versus if you're single, you only get 6143. Okay, so you're married filing jointly, and you got 3 children, you make 20,000, you can get 6431 earned income credit. If you're single, however, you make 20,000, you're only going to get 61. All right, now that's earned income credit. Okay, that's pretty straightforward and simple. Okay, now the next thing is the child tax credit. Now remember, the child tax credit is 2 things. Okay, it's a tax credit, which means that if you owe taxes, all right, if you owe taxes, then you will receive a $2,000 credit on those taxes. All right, so let's talk about that a little bit. This is going to be pretty straightforward, I think. We do have to use a little bit of math. I got my calculator here. So let's see. All right, here we go. So let's say your income is, let's say it's 20,000. Let's say 30,000. We got to get a good number up there to pay taxes. Okay, let's say it's 30,000. All right. Let's say you're head of household. Let's say you're single, one baby. All right. So what you're gonna do is you subtract 18,000 from that number, because 18,000 is your standard deduction. Okay, and that leaves $12,000 of taxable income. All right, that income is taxable. Now, what we have to do is we have to go and we have to find the IRS tax table. Okay, for 2018. All right. And looking for, there we go. 2018 1040 tax tables. All right. It's how you figure out how much tax you have to pay. Back in the day, you used to have to go to the library and get this stuff. But now it's all on the computer. All right. So what we're looking for is, now this is a table, just like the earned income credit table. Okay. The difference is this is taxable income. So what this says is that if your income is between $5 and $15, if you're single, you're going to pay $1 of tax. Okay, that's the way it works. You see, you got married filing separately, you got married married jointly, married separately, head of household. Okay, all right. So let's scroll down. What we're looking for is looking for 12,000. Okay, right now we're in the 1,000. So let's scroll all the way down, looking for 12,000. That's our taxable income. All the way down, all the way down. All right, so we got 12,000. Okay, 12,000. All right, head of household. We got one baby. Okay. Our tax is $1,203. That's how much tax we have to actually pay, $1,203. Now, what we're going to do is we're going to take that $1,203. That's how much tax that we actually have to pay, right? And we're going to subtract the $2,000, which is a child tax credit. Okay? Okay, so we don't pay any taxes at all. So now what we have is what's called additional child tax credit. Additional child tax credit is what's left over from the child tax credit after you've taken care of your tax. So right now you see that we have $797 left over. So that $797 is going to be our additional child tax credit. Okay? Now, when someone calls me and says, hey, I want a quote, I want to know how much I'm going to get back. Okay? The first thing I have to know is how much money they made. All right? So let's just assume that this person made $30,000, okay, and they have one child. So let's do this real quick. It only takes maybe 2 minutes. All right, but like I say, you got to know what the income is. All right, so here we go. $30,000, okay, and we're doing one child. So earned income credit is going to be between $1,653 and $1,645. Okay, no one makes exactly $30,000. So maybe let's say it's $30,001. Okay, so their earned income credit will be $1,645. Okay, and their additional child tax credit is going to be $797. So all we're going to do is we're going to take that $797 and we're going to add $1,645. That is your total refund right there. Now, the only thing that you can get back more than that is going to be the federal taxes that you paid out of your check. Now, here's the thing, people. If you know you're going to have a refund every year, it is unnecessary to have taxes come out of your paycheck. It makes no sense. You don't owe any taxes, so why are you paying taxes? But whatever. I digress. If you have any federal taxes withheld from your paycheck, you're going to add that number to this number. That's your refund. That's simple. It ain't more complicated than that. All right. Now, in the video before, we talked about business losses and how you can increase your earned income credit by using a business loss, right? So we've already kind of discussed that. You see here, your earned income credit is $1,645 at $30,000. And if you see here, as your income decreases, your earned income credit gets higher and higher and higher. Okay. So let's say we do $1,000 business loss. Well, now your income, instead of being $30,000, is going to be $29,000. So there we go. So now your earned income credit is $1,805. So what does that mean? That means that you're roughly getting $150 for every $1,000 that you write off in business expenses. And remember, you can only do that 2 out of 5 years. Anything more than that, you stand a good risk of being audited and all your credits taken away and you sent a bill. Okay, I've seen it happen a lot. So just remember, 2 out of 5 years. So that's how taxes and credits rather are calculated when it comes to children. Okay, there are other deductions, of course, that will further lower your tax bill. But here's the thing, though. Okay, this is what I try to explain to people. The child tax credit. I'm sorry. The child tax credit is the very last credit that to take away your tax. So if you have any sort of if you have any sort of daycare deductions, right? Then that daycare is going to be roughly, I think, 30% of the total daycare expenses. Let's find out real quick. All right, here we go. Show you. So this is the form. This is the 2441 child independent care expenses. All right. So here we go. This is the way it works. So again, remember, I can't know anything unless I know what the income is. The reason why is because what this says is if your income is between 0 and 15,000, then you multiply your daycare expenses by 0.35%. That's 35%. Okay, or 0.35. That's 35%. But as your income goes up, you see that number drops. Okay, we come over here to 30,000. It's 0.27. So that's about 27%. Okay, so 27% of $3,000, which is the most you can have in daycare expenses for one child. It's $3,000 per child. Okay, take 3,000 multiplied by 0.27. That gives you $810. Okay, so what that means is if you owe 1203, okay, then you have $393 left over. Okay. And then use your child tax credit to get rid of that. Well, now you have $1,600 left over from your child tax credit. But the IRS caps your additional child tax credit at $1,400. So out of this $1,600, you can only get $1,400 back. Okay, so now we're talking about $1,400, right, plus the $1,645, and now that is the refund. $3045 versus $2,442 when you add in the daycare expenses. Okay, that's really about it. Daycare and yeah, pretty much. It's late. But now I feel like I gotta find out for sure, because I can't just be talking outside of my neck. You know what I'm saying? All right, so let's see here. I'm almost certain. Child tax credit, daycare credit. Yeah. All right. 40. These videos getting longer and longer, aren't they? Alright, here we go. Alright, there's a couple there. The foreign tax credit, you can definitely use that. Typically, something like that is going to be on a 1099B, but you can have a foreign tax credit without a 1099B, so you can always use that. There's your daycare stuff. If you have any education expenses, that can take away from it. Retirement savings contributions, if you have a 401k or IRA at work, there's a credit for that as well. And then you have the child tax credit. So all these credits get taken before the child tax credit. And the idea behind it is to simply maximize the child tax credit as much as possible. That's what the IRS is trying to do. Really trying to help people out when they do that. Okay, so again, foreign tax credit gets taken first. Dependent care credit gets taken next. Education credit gets taken. Retirement savings contributions. And if all that stuff covers your tax, then you get the full additional child tax credit back. Alright, that's simple. So again, there's no such thing as getting a certain amount per child. It all depends on your income. Alright? Income.